Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so I know we hit this a couple months ago with you guys. I kind of wanted to bring Carvana back up, just due to the fact that it's up 750% this year. And, basically I kind of want to, get your perspective from LikeFolio and the data that you guys have. Is this a turnaround story? Because there were cries at the end of last year that they might go bankrupt. And from a lot of analysts, they put like $5 price targets on this. Are you guys seeing any positive data that kind of supports this massive rally?
Well, I'll tell you, we did not see data that supported a $5 price target or the doom and gloom that was coming at the end of last year. And now we don't see data really supporting a 750% run in the stock. We're kind of at the end of another extreme, I think, in terms of Carvana stock. And in fact, what we see with Carvana, we really see kind of with a bunch of companies in this sector, and that is, the used car market is down significantly as consumers get used to new levels of interest rates and a somewhat tightening economy. And so when we look at Carvana web visits, just the number of people going to the website, that was on a really nice uptrend, for several years as the company gained favor with consumers and as consumers expanded their likelihood of purchasing a used car or shopping for a car. But now it's pulled back significantly over the past year, down 34% year over year. So there's definitely a weakening in demand on the consumer side for Carvana, but it's really nothing out of the ordinary in terms of kind of that cyclical nature of rising interest rates and lower demand for used cars. So we don't see anything crazy that justified the doom and gloom that was coming out of Wall Street, but we also don't see any big turnaround story in terms of justifying a 750% move up. I think that's mostly a short squeeze phenomenon. And so I think the truth lies somewhere in between the two levels. I think we'll probably end up there by the end of the year. But overall, people like Carvana. They love the experience of selling cars and buying cars through Carvana. It's got a really high level of trust with consumers. So I think long term, this is a good company. It's just in the short term, the volatility of the stock is so extreme and so, kind of disconnected from reality that I think you just have to take a step back, let things settle out, and then determine if you want to be an investor in this company.
Andy, in fiscal 23 first quarter, they lost $286 million, this company. The last 12 months, they've burned through $1.1 billion in cash. And at the end of the first quarter, they had about $488 million in cash and $6.5 billion in debt. This, to me, it sounds like with interest rates going higher, right? So they're going to have to refinance that debt at higher levels. This seems insurmountable to me. Now, I get, why are we looking at Carvana? Because it's traded 152,000 option contracts today. So someone has interest in it. So we should cover this, but isn't this just a long goodbye? How can this company climb out of $6.5 billion in debt?
Well, I think the number one thing that the company probably learned is that they don't want to be a high inventory company right as things turn against them. I think that was a major mistake that the company made. I don't see it as insurmountable simply because I see the consumer demand for what the company is doing growing at an exceptional rate in general, and the trust that consumers have with the company far outweighs the trust that probably Wall Street has for the company, or that you or I might have as potential investors. And so I think when a company has, a disruptive type of approach to an existing market and it works, you have to give them a little bit of the benefit of the doubt. You have to allow them to fall on their face as the tide first turns against them, which I think has happened here. It'll be a long road to recovery, but I do think that they have the relationship with consumers and the brand name, the disruptive technology to make it through. I'm just not sure if the company is going to end up being worth 1/10 of what it is today or 3 times what it is today, because it's really impossible to figure out because of all of those financial situations and ratios that you just mentioned. It's an extreme case in every regard, and I think it's a great trading vehicle for people that love to trade and kind of almost gamble on a hot moving volatile stock with heavy options liquidity. But other than that, I would stay as far away from this as possible.
Yeah, I like that point that you bring up, Andy, because estimates are that 50% of the stock is shorted, right? So maybe people are getting squeezed. We're seeing these market moves the way they are, and it's not based on fundamentals if you just look at their balance sheet at this point. But to your point, Andy, when traders and investors look at this and they go, oh man, this stock, I missed out on it. But at the same time, we could be down 40% tomorrow if the company came out with something, or maybe they're issuing more shares to kind of pay off some of this debt. Is that the risk when you look at this from LikeFolio's perspective, is that, yeah, the data is not really supportive of this massive move, but at the same time, you might want to stay out of the way of this one?
Yeah, I think the big takeaway from this entire conversation is that the underlying data doesn't matter. This is a stock that's trading based on the stock's trading, right? This is a stock trading based on short interest, options, volatility, all kinds of outside interests that really have nothing to do with the fundamentals of the company. But I do want to say one thing: if we're going to follow anybody on Carvana, I want everybody to look up Ernie Garcia II. He's the billionaire father of the founder of Carvana. He sold $3.6 billion worth of this stock in September of 2021, possibly one of the greatest trades in the history of the stock market. And I think we should give him a little round of applause, because now the company's got almost as much debt as what he made on that trade.
Yeah, that stock was trading over $375 in September of 2021. All right, great data, great stuff as always, Andy. Appreciate it.
Thank you, guys.
All right, that's Andy Swan. LikeFolio breaking down the data, which sometimes data doesn't matter when stock trades like this, but
momentum.
You've got full kudos to Andy, and he says just stay away from it. So, well, some people like to trade this stuff,
right,
and they don't want to stay away from it. But you got an example trade for us here, Kevin, in Carvana that might set up for a bigger than expected move on top of the big moves that it's already had.
Okay.